Hi everyone, and welcome to our business recovery webinar. Can I just check that you can all hear me okay? There's a little chat button at the bottom if someone could just type in there that they can hear me, just to check that we're good to go. Perfect, great, thank you. Welcome to our business recovery planning webinar presented today by Ian McLeish. My name is Ikra Aslam and I am one of the client managers here at Rosen Associates, and I will be your moderator today. For those of you who are unfamiliar with the webinar environment, we've got some Zoom settings to go through. So you can select the audio settings here to select and test your speakers. You can submit any questions that you've got via the Q&A button. We'll answer any questions that you've got at the end of the webinar, but feel free to drop in any questions here as we go along. You can, of course, leave the meeting at any time just by clicking this Leave Meeting button. Just to let you know, this webinar is being recorded, so we will be sending out a copy of the recording and also the slides to everyone that has attended today. Now I would like to introduce today's presenter, Ian McLeish, the Director of Roslin Associates, and Ian will be taking you through the webinar today. Welcome, Ian.
Thanks, Ikra, and thanks to everybody who joined today. So, smooth seas don't make skillful sailors. The thought for today seems particularly relevant just now, as although times might be tough and running a business can be much more difficult and stressful at the moment, the current situation also means that we're forced to learn new skills, abilities and mindsets, which will be invaluable once we come out the other side. You know how sometimes we only start doing the things which are best for us when we're faced with a very difficult situation? For instance, losing weight when faced with a health scare. Well, similarly, I've seen many clients start adopting best practice in relation to their business as a result of the extra difficulties they're currently facing. It's some of these best practices adapted to how things are today and packaged into a robust plan and strategy that I'll share with you today. So without downplaying how difficult things are at the moment, let's look at how we can get through it and the new business practices we can learn to take us forward successfully in future. So again, thanks for attending the webinar. You've taken the first step to making the changes you need to make to be successful in the future. And this is what we're going to cover today. Firstly, closing the disconnect, and what that means is the importance of working as a team with your contacts and advisors. The need to reinvent. What do you need to do differently as a business? Your budget, the all-important personal and business financials. It's a vital and necessary part of any business plan, but not sufficient just by itself. Opportunities, vulnerabilities, and critical challenges. This is a detailed and measured assessment of the business risks that you're facing so that you can avoid the problems that might be coming. Goals and actions. Agreed steps to be taken by the business owners along with some kind of accountability. Then we'll look at pulling everything together as a complete package, and that's your business recovery plan. Then we'll move on to the next steps. What are you actually going to do about this? Finally, our support, how we can help, and at the end, any questions you may have. Now, before we get stuck in, I just want to throw in the usual disclaimer that we tend to do as accountants. We're not insolvency specialists here. That's not what this is about. There are very strict rules and regulations around insolvency, and some of them have been amended to account for the impact of COVID-19. However, if your business is unable to continue to trade as a result of insolvency or bank finance issues, we can, of course, refer you to a suitably qualified specialist. So, closing the disconnect. Firstly, I just want to share some thoughts about how we can stay better connected at this time. I'm not talking about how we can be better connected with technology with things like these webinars and our online meetings, although they are important, I'm coming from the perspective of how you can work together more effectively now and in the future, where your expertise can be combined with ours and others to create outcomes that wouldn't be possible by working alone. In our view, it's never been more important to create and connect with a team of people who can help you at this time. It could be possibly a bank manager, or a lawyer, HR advisors, your accountant, bookkeeper, so that together you can come up with a far better plan. At Roslin Associates, our core purpose is to help our clients gain time freedom, money freedom, and mind freedom by helping them build better businesses. And that's really why we're running this webinar. This should be just the beginning of how we can work together even better. So take lots of notes. Don't be shy about asking questions. Ikra showed you how to do that, the box at the top or the bottom of your screen, depending on how you get set up. And let's get on to it. So during times of adversity, we're often forced to think in ways we've never thought of before, to reinvent the way we work or behave. We see 4 main opportunities for you to reinvent your business. The first opportunity is to innovate. The Oxford Dictionary defines innovation as the introduction of new things, ideas, or ways of doing something. Now, a great example I've seen during the pandemic is a company that changed from selling aerospace parts to sourcing and selling PPE equipment. They used their own premises and their processes in order to change to something that was more relevant at the time. In this sense, innovation is doing something completely different, often using existing skills and technologies. An example for you might be to introduce a new product line or a new service. The second way to reinvent is to re-engineer. The Cambridge Dictionary defines re-engineer as to change and improve the design of a product or system. In other words, use what you've already got to produce something completely different or quite different. One example of re-engineering is beer companies looking at what their plant can make, moving from producing beer to creating hand sanitizer. Another example was the Formula One teams who took up the NHS challenge to make ventilators. The third way to reinvent your business is to adapt or change the way you deliver products or services. Remember the biological definition of adaptation, which is the process by which a species becomes fitted to its environment. In other words, if we take the new normal or new environment that we find ourselves in, how can we change to suit that environment better? One obvious example is this webinar. As some of you know, we used to have regular seminars in our office, up to about 12 people in one room. Can you imagine? We obviously can't offer seminars like that at the moment, but the wonder that is Zoom enables us to continue delivering content, just in a different way. We'll find a new way to adapt and deliver it differently. Similarly, we're providing an organizational review to a client next week over Zoom in 3 sessions. It saves time because there's no traveling particularly, and the sessions can be easily recorded. As we all get used to doing more online, some people are saying that they prefer the new online world. So forced adaptation can have unexpected benefits. So we know we can reinvent in 4 ways. 1 is innovation, secondly, re-engineering, 3, adaptation, and number 4 is what we call to widen your lane. And what we mean by that is to broaden your product or service offering. For example, a cafe who can broaden their offering from purely packaged sandwiches and coffee to include new ready-made meals, boxed sweet treats, to selling wholesale ingredients, and even ingredient bundles with the recipes for making their signature treats. So with these 4 ideas in mind, innovation, re-engineering, adaptation, or broadening your offering, what can you do in your business? This is what business recovery planning is all about. What can you do to innovate, re-engineer, adapt, or broaden what your business does? I would encourage you to think very deeply about that. So, your personal budget, it's a natural order. It's a natural order in which to reinvent your business with business continuity planning, which we did back in March. And I believe some people today were there for that webinar. With that, we asked you to put the oxygen mask on yourself first. Business recovery planning is no different. Now remember that the business is there to serve you, not the other way around. You shouldn't be a slave to your business. So step one is to put your shareholder or owner hat on and define what you need to get from your business. How much do you need to take out of the business? Can you make savings in your personal spending, for instance, to reduce the cash flow strain of your business? No doubt you've made some savings during lockdown. I know I have. Can these savings continue? So updating your personal budget is best done using a template so that you don't miss anything. We can provide a suitable template to use as part of your business recovery planning. And an easy way to get started is to simply look at your bank statements online to see what you typically spend in a month. And some of the new bank accounts will actually categorize your spending for you to make it easier. Of course, you need to be realistic too, as lockdown has been very different and spending opportunities have been very limited. So make sure you go back maybe 4 or 5 months to review your expenses. Now, don't want to frighten anybody with the numbers. It's actually quite easy. Once you've done your personal budget, you can build up your revised business budget. Now, many of you may have already done a business budget for the year, and this is likely to change significantly now. We're working with several clients who made plans and budgets and forecasts at the start of the year, which are really not relevant now. Things have completely changed, so we need a complete overhaul to take into account the current situation. And again, for every business, this is different. We always recommend what we call a bottom-up process, where you start with the increase in cash that you want at the end of the year, and after you've had what you'd like to have after your drawings, tax, loan repayments, etc. For some, the idea of an increase in cash may seem unachievable, so the first step may be just to work out what needs to happen to maintain the current level of cash you have. It's important to start here, as many businesses have found that they didn't have a sufficient war chest of cash going into lockdown. Now, this really is not designed to be a technical accounting-y thing here. I just want to show you how you can take control back by going through a high-level, step-by-step process. It's actually just a simple arithmetical exercise. If you can add, subtract, and multiply, you can do it yourself. So, in this example, we've said that we want at the end of the year or whatever period, the period doesn't really matter, at the end of the period we're looking at, we want to have £3,000 more cash. So how do we work out how much profit we need to make? Well, there's other things that affect the amount of cash you have other than just what's in your profit. For instance, if you can get a client to pay you £1,000 more than you were expecting, that's £1,000 less you need to get to that £3,000. If you have to pay out £2,000 to look to the loan principal, so that's not your interest, that's the capital repayments. Again, those aren't in your profit and loss account, so you have to have profit enough to pay them back. Then there's £1,000, which is, in this instance, it's an asset purchase. So you paid out £1,000 during the period for, say, a computer or whatever. Then you've got your drawings, which come from your personal budget. You worked out what you need to take. So this doesn't include your wages. This is, in normal circumstances, this would be dividends for a small company. So if you add all these up, 3 minus 1 plus 2 plus 1 plus 5, that tells you in order to cover all these things, you need to make £10,000 after tax, net after tax profit. Okay, so how much profit you need to make before tax? Well, if it's in the UK, it's a company, it's roughly a quarter. So that takes us up to £12,500 profit before tax. Then we say, right, what are our overheads? Well, you can get that from your accounting software, whatever. In this instance, it's £20,000. That includes perhaps rent, salaries, IT support, that sort of thing, heating, power, light, travel. So by adding the net profit before tax to the overheads, you know that your gross profit you need to make to cover everything is 32,500. And you know that your gross profit percentage, now I'm not going to go into this too much detail, but basically of every pound you receive, how much do you have to pay out directly in order to make that pound? And that would be 50%. So you need to double your gross profit in sales, and that gives you your sales figure for that period. So basically, if you can hit 65,000, the 50% gross profit with 20,000 overheads, you will make £12,500. Again, it's just arithmetic. Allow for some tax. That's an after-tax profit, which covers your drawings, your asset purchase, your loan repayments, and the increase in cash that you want at the end of the period. Hope that makes sense. So ideally from then, you can then convert that into a budget for a period, maybe 12 months, 6 months, depending. And then on a month-to-month basis, you can then track to see how well you're doing. It is really that simple. And this is where having real-time digital reports of your numbers is so important. So to take another example, if you identified that your sales for the year that you needed, top line, was £500,000, that's roughly £10,500 a week if your business is open 48 weeks a year. So you'll need to have a system for recording how you're doing against that target. So in week one, you've had £8,000 sales, you know you're already £2,500 down, and you need to do something about it. There's no point waiting until the end of the year to see how much money you've made. You know right away that you're not on track. Likewise, if you have customer terms of 7 days, and your customers are currently taking 41 days to pay you on average, you'll want some system to measure if that number is getting better as a result of the actions you're going to take, as set out in your business recovery plan. So we strongly recommend that you measure no more than 5 of your most important numbers. And these are called key performance indicators or KPIs. Some examples could be daily, weekly, or monthly sales, the gross profit percentage, how long people are taking to pay you on average, or the increase or decrease in cash for the month. Once you have the KPIs and the budget, it's important to have these numbers loaded into your monthly reporting system so you can track your actual results to your budget. And we can help you with the most appropriate technology to use for your particular business in order to achieve that. So once you know at a high level what your budget is, it's time to look at the opportunities that exist to achieve that budget. Again, we recommend focusing on no more than about 5 key opportunities. Think of the ideas we talked about earlier to reinvent your business. Opportunities could also be things like working in more of an online way with your team or your customers. You may no longer need the premises, or you may need to redefine the roles of people in your business. There may be new lines of revenue to pursue or other businesses to acquire. Other opportunities might be around the adoption of technology or systems to improve your efficiency or your online communication. Taking the time to brainstorm all opportunities to improve your business is a very valuable and empowering exercise. You need to leave no stone unturned here. Of course, the flip side of opportunity is your vulnerability. What are the 5 biggest vulnerabilities in your business right now? They could be things like poor cash flow, a sustained downturn in demand for your current products or services, poor debtor management or banking covenants not being made. Naming the vulnerabilities enables you to make a plan to overcome them. Name so you can tame is a great mindset to have. And you need to be brutally honest in your assessment of your vulnerabilities. A rosy plan which avoids difficulties is actually less than useless and really won't do the job in these difficult times. You really have to be honest with where you are. So once you've identified your 5 biggest opportunities and 5 vulnerabilities, you need to identify your 2 to 3 most critical challenges. What are the critical issues you need to address and take action on? These might be things like deciding whether or not to sell or liquidate part of the business, or establishing an online sales platform, or securing sufficient finance to trade through the next 3 months. We strongly recommend that you do a careful analysis of all risks in your business. The best way to do this is to complete a risk register, which assesses the likelihood of each risk and then the consequences for your business if that risk isn't mitigated. And the risks fall into 10 categories. In each category, every business will have its unique situation. Here are some examples of the kind of things that have come up under each category working with clients. So the first category is governance. In other words, the people who are really in charge of how the whole thing works and is operated. So risks could include poor planning, perhaps lack of a business recovery plan, lack of up-to-date policies, poor discipline around working on the business. For leadership, risks might be around communication through reporting or team morale. Products and services, the risks might be around lack of adaptation or innovation. Operational risks could be around suppliers and supply chain issues, around your contracts or your key customers. Marketing, these risks could include poor return on investment or overspending or perhaps lack of a digital presence. In sales, the risks might be the need to adapt to e-commerce or online selling, or risks around poor training, these sort of risks. Finance, lots of areas of potential risk here: undercapitalization, otherwise not having enough working capital in the business to actually do what you need to do, pay your bills, etc. Lack of sufficient cash flow, poor finance structure or poor credit control and debtor management, poor reporting so that you don't really know where you are. It's like driving a car without any sort of dashboard, or lack of forecasting, not knowing where you're going, not having a map. HR risks might be overspending, having too many people, or poorly managed restructuring causing problems like grievances. Admin risks might be lack of automation, outdated systems which are unable to cope with developments throughout the company. And technological risks, perhaps poor adaptation of software or apps for the business as it grows or survives. So, goals and actions. Once you've identified the risks, you need to pull everything together into a cohesive plan with goals, actions, and responsibilities. Your business recovery plan is much more detailed than your business plan. Hopefully most of you do a business plan once a year for the next 12 months so you know where you're going and how you're going to get there. But in a business recovery plan, you go right down into the detail for each department of the business, because it's much more about how to adapt and reinvent, as we mentioned earlier. Goals need to be SMART, and all actions need to be assigned to someone responsible for their completion by a certain date. These goals and actions should be updated regularly through some form of regular review process. Now, this time we'd recommend at least a monthly review, perhaps a weekly if things are changing quickly. And for the next 6 months, keep it like that, and then perhaps change to quarterly if that suits once circumstances become more consistent. So I'm going to go through how to pull all of this together as a complete package. So depending on your circumstances, your package should include your personal budget, talked about that, your risk register, again we have a template to use to develop that, your business recovery plan, which I will look at an example of, a final example of very shortly, your business forecast, which takes your bottom-up budgeting and extrapolates over a period of probably a year so that you can tell how you're doing compared to that. An updated organizational chart, and that's if you've got a team of people, and possibly if you're applying for finance, a finance application. Now, you may not need to do all this work at the same time. For example, you may have sufficient cash flow now, so you don't need to apply for finance. Likewise, if you don't have a team, you may not need an updated organization chart. What's important is that you establish what's right for you. What combination of these you need, and we will do them. So let's have a quick look at an example. This is totally fictional. It's based on a fictional electrical firm. So I'm not going to go through it in fine detail, because that would be pretty boring because it's fictional, but just enough so that you can see what it should look like when completed. So, for instance, this is the executive summary, which is also the last bit that you do. It summarizes the findings of the whole process and says what's going to happen at, as it says, an executive summary level. Here you can see some things that have come out of the personal budgeting, looking ahead for a while, any finance needed, and looking at the roles of the business owners and hours of work. Now, then we look at the budget. Now, this is the top half, the bottom half will come up in a second, but this is the annualized version of the budget we looked at again earlier, which is from the bottom up. So you can see the top line, it's got the sales, gross profit, overheads, that's the profit before tax, and then the bottom half of it, take the tax off, gives you the net profit, and then these are all the things that we talked about: drawings, asset purchase, loan principal, extra money brought in, and at the end of the year they plan to have £10,000 more cash in the bank than at the start. So that's their plan with that. Their KPIs we talked about, debtor days, in other words, how quickly people are paying, how much stock they're holding in terms of compared to the stock they've looked for a year, the gross profit margin, the sales targets weekly, and that they must have board meetings regularly. For opportunities, again, these are relevant particularly to that particular business. There's no point really going through them, but you can see the sort of things that they're talking about. Vulnerabilities, these are the ones that come up with cash flow, departmental or divisional differences, other areas there you can see that they've come up with, and the most critical challenges are there, fixing the cash flow so the business can trade for the next 3 months. Then this is where it really starts to take place. Under the different headings that we talked about where the risks were, we've got the risks that they've identified, the annual goals for that particular area, 90-day goals, what they're going to do in the next 3 months in order to address the risk, and the actions they're going to take, and most importantly, who, when they do it by. So they've gone through all the different risk areas that we've mentioned earlier and identified the risk, set a goal for the year, a 90-day goal, 90-day actions, who's going to do it and when they're going to do it by. And that's the rest of the risk areas. So you can see quite a lot of details come out of that, but it also gives them absolute clarity on what needs to be done in order to not just survive, but hopefully thrive as coming out of the other side of this.
Thanks, Ian. I hope Ian hasn't overwhelmed you with too much technical detail here. Our goal has been to share with you what business recovery planning is all about and how to do it. So, what are your next steps from here? Doing nothing is not an option. You're entering into a period of business as not normal. Doing what you have always done is unlikely to give you the same results as you've had in the past. Remember, to put the oxygen mask on yourself first. The more sustainable you can make your business right now, the better for everyone. Make a plan to get through these challenging times. Focus on what you can do as opposed to worrying about what might happen in the future. And of course, we are here for you and want to help. Our recommendation is to complete a business recovery plan. We've been receiving great feedback about how helpful this process is. So if you haven't yet done your business recovery plan, now's the time to do this, as it will form a great foundation from which to build your cash flow, as well as plan on getting things back on track for your business. So we've got a few options to complete the plan. The first one is to meet us online so we can do this together, either as a one session of up to 4 hours or 2 2-hour sessions. We'll send you in-depth pre-work to complete so we have time to consider the impact COVID-19 has had on each department of your business. We'll use your completed pre-work to guide us through the plan and set goals for each department. This ensures you have a detailed and well thought out plan to give your business the best chance of recovery. The second option is to meet us online for the business recovery planning session, as I've just mentioned, and we'll work with you to prepare an updated cash flow. You can see the prices here for the first two options, and at the moment, these prices are 50% off. The third option is a complimentary business recovery review. We'll send you a business recovery action plan to complete, which is a condensed version of the plan that Ian has just gone through. This option suits those of you who may have a smaller business that doesn't require such a comprehensive business recovery plan. Once you've completed the action plan, we'll schedule in a 15-minute phone call to review your plan and discuss next steps. The risk with this approach is that with everything going on at the moment, you may not get round to doing the work. If you're unsure on the best way forward, or you want to talk to us about how we can work together, we recommend a complimentary meeting to discuss your goals, current problems and challenges. We can then agree the best way we can support you. If you're going to need to obtain business funding, or if you have already obtained it, we believe it's vital that you prepare a cash flow forecast. Any loans received need to be repaid at some point, even if that's 12 months away. So your business needs to generate enough profit to then convert that into cash to make repayments. We know it may be difficult to commit to spending money right now. We have different payment options available, so please don't let cost be a barrier. Get in touch and we can work together to come up with an arrangement you can manage. We know that the benefits you will get from these services will be far greater than our fee. Most importantly, it's about helping you as quickly as possible and ensuring we are working with you to build a stronger, more resilient business. If you are interested in any of these options or want to discuss them further, please let us know in the survey that will pop up once the webinar is finished, or you can contact us by email on info@roslinassociates.co.uk. Or if you're a current client at the moment, please just get in touch with your client manager. So if anyone's got any questions, please just submit them now in the Q&A box and we'll answer any questions that anyone's got. If you've got any questions that you want to ask privately, that's completely fine. Please just get in touch with us after the webinar. And if you do need to leave, please just complete our feedback questionnaire that's going to pop up once you hit that leave button, and it should only take a couple of minutes to fill in. Has anyone got any questions? We'll just leave that a minute or two just in case anyone's got any questions to pop in. Okay, so I don't think anyone's got any questions. So thanks again for everyone attending the webinar. We do really appreciate that you've taken the time to attend, and we hope that we've given you plenty of ideas to think about and some clear options for you on how we can support you. So before we go, I just thought I'd share this quote with you. Things may never go back to normal. You need to create a new normal, and that's okay. If anything, make a simple plan today. Commit to at least 3 actions that you'll take as a result of being here today. Write them down. Give each of them an owner and a completion date. This is a worrying time for many businesses, but you don't need to worry about that alone. There is a ton of support out there, and there's loads more to come, and we are here to support you. Thank you again, everyone, once again for attending the webinar, and please do remember to complete the feedback on exit of the webinar. Thanks, everyone.